All right, it's a stock market update here on Monday. It's Monday, May 22nd. We're approaching the close. It's like 2:30 p.m. Got an hour and a half to go. I'm gonna have to get on the road. We've got roller hockey today. It's gonna be a busy day, so I wanted to get this video out of the way before I head out the door. And I have a tremendous amount to talk about, but what I really want to try to make it easy. It's so complicated. If you look at the screen, there's a bunch of titles and a bunch of colors and a bunch of numbers, and it's way too much to digest. But the reason why it's here is so that we can quickly talk about one thing at a time and understand that this is really giving us an order of companies that you should straddle and purchase stock options, a call and a put, the same strike price for a given period of time for these companies. And it's really going to show you how much they made if you had done that. So I spent a good deal this weekend updating all of the bid ask prices for the options that are either currently expiring on the 26th, this Friday, or many other companies that are not on a weekly option schedule, but are on more of a monthly or quarterly option schedule, have different dates that were the 16th of June. That's the next one that those expire. So I got all these companies in here. We are 1,350, 60 plus, right? And these numbers are pretty much, they were really good as of this weekend. And at the very tail end of next week, this is about what the prices were. They're not all currently updated as of right now, but they're giving us a really good idea of what the cost of options were. And now this table is comparing it to how far they've moved since we put that information in there. And it's giving us an inferred intrinsic profit that the options would actually be worth. It's this number that I wanted to kind of discuss, because I want to be able to say, hey, guess what? If you had purchased, for example, Schrodinger, a company I know pretty well, they do move a lot. They're trying to program protein folding and come up with synthetic drugs, essentially, that they program. That they haven't showed too much promise other than that they have a 3D model of trying to do protein folding and stuff like that. They're an interesting company, but they always go up and down a lot. I understand why they're a pretty good mover. Well, apparently today they're up almost $6 a share, and it only cost $422.50 to get a call and a put on them at the strike price of 30 back last week. But now they've moved. It's probably about $9 a share since this went in here. So if you had purchased these two options for $422, okay, the call and the put, if you want to see exactly how much the call was, we could go look into the cube and try to break down exactly what each one was. It would have been between $320 and $360 for the call. So call it like $350. And here, this is a really wide range for this bid ask. So this is bad. There's an $80 range here. So you could have paid up as much as $120, let's say. So call it $350 plus $120. That's really $470, which makes the cost of these options really $470 and not $422. That's why you have to kind of research each one. But this is giving you an estimate of what it was at that time. There was a point where I put that in there, and I think it was on like Thursday or Friday of last week. And that's what it cost for the option that expires on the 16th of June. Anyway, so the thing is that would show that you would have made $485, because you could sell one of these options, because they're already at 39.08. You could sell one of these options for over $900, because they're more than $9 away from 30. They're at 39. So the intrinsic option is $100. Every dollar that they are above the strike price is what that call ends up going for. So that's why you could have made $485 or 114% on your Schrodinger call put straddle options for this week, just here on today, Monday, and Friday, I guess. I think this is including perhaps Thursday and Friday of last week as well. I believe it might be. Point is, this now gives us this interesting list, and we should analyze these stocks to see if these ones are good purchases. And if they're up on this list, it means they were a very good purchase as of today. And then we'll resort this list by other things, like not just percentage profit, but also ABS rank, because we believe these companies with extremely low rankings are really high on our list of potentially profitable companies, because their options are going to be less expensive and they're going to vary more appropriately for whatever their share price is. So this is really the true nature of the list. Lucid is a $7 a share company that's on there for a different reason. I almost want to remove them. They'll probably make money, but they won't make nearly as much because they're only $7 a share. But the other ones on here, Kraft Heinz is a lower share price company, but still okay. Wells Fargo kind of lower. Micron, Starbucks, Mondelez, Pepsi, McDonald's, Kimberly-Clark, Procter & Gamble. Twilio has had an amazing day today. eBay, you can see these things are on here. So this is the order, and it's going to start showing how those options are doing as of right now when you want to update this. So, for example, today, another more visual way of looking at how the day has been going. There's a couple other things I want to do in this video to really display what we can see now. But Twilio, I remember talking about Twilio on Friday. It popped up as one of the top ones on Friday. It has a really good ABS number, right? Like their ABS number is 3.8%. That's fantastic. You want this number to be as close to zero as possible. And anything under 5% is awesome. So they have a really great number, and they were a big mover on Friday, and here they are moving a ton today. They moved almost twice as much as they needed to move when their options were $323. Now, I don't know if their options have increased now because they're starting to move like crazy for some reason, but if you can still get them for about that amount, it's still a good deal. Like they're on this list for a reason. Pfizer's the other one, only slight mover, but moves way more than it needed to. They only cost $94 for those options. They moved $1.52 worth of intrinsic option value just today. So, I mean, that's like making more than 50% on your money. Just selling that 152 after you spent $95 on it for the two options. So that's why that's on here. We're looking at, the list of companies that went up. There's a lot of companies that overtook the amount that they needed to move, which is what this thing is why when it's more than 100%, it means this company moved more than they needed to just today to be profitable, straddling their strike price with a call and a put. They moved enough more than the cost of their options. Like this bigger one, Crystal Biotech, it costs $1,200 to buy their options, $1,235, but they moved $18 today. It means they moved $1,893 in intrinsic option value. So you could turn around and sell one of these options that you just purchased for $1,900, even though you paid $1,200 for both of them. That's what that means. And I mean, it's not one that the algorithm recommended because it had to move a lot and the spread range is not that great. And it's really expensive, but well, algorithm didn't recommend it, but it still shows you that was good. Now, I want to show something else. I showed the things that were making the most money, okay, when we're talking about profit percentage. Well, there's other profit percentages. So check this out. These are the ones that made the most if you chose them, okay? These companies, and let's just look at, we're going to make it really easy to use. We're just going to look at this. Let me get rid of all this other stuff for a second. I know this is easier to look at, even though there's still a lot on here. But this is how much money this company made if you bought the option on Friday or something, based on last time I put this information in here. So, you're making $700, $400. These companies, Cavco, Home Depot, Academy Sports, Kimberly-Clark, Foot Locker's still on here. They did go down a bunch today. They did go down enough today for you to make money if you bought them on Friday. So that's what you could have made, right? What about what you could have lost? Now, this would not be a finalized loss because there's 4 days left in the week for many of these options, and some of them it's even more than 4 days if they expire on June 16th. But basically, if you bought the AutoZone options for $11,695, they've only moved by, a quarter of what they need to move by, and so the intrinsic value of whatever option you have is only worth a lot less. It's only worth like $1,000 or something based on how far they are away from their strike price. And that means that putting a lot of money down on these big ones, you really have to move throughout the week, or you can lose a lot of money. This is not exactly what the option's worth, but intrinsically it's what it's worth, meaning if you had to convert the option at whatever price it was currently. So I like to see, I want to monitor this throughout the week. This is going to be really interesting to watch this every day because we're going to leave the strike prices in there. We're going to leave this in there as if we bought it at the tail end of last week. We're not going to change that. And we're just going to monitor as their price changes what the value of the current options are. That's what this is estimating here. So a lot of these really expensive ones are down, right? Well, let's go back and look at the ones you make the most money on. How many of them are up money so far? It looks like it's only about 50 of them, 50 of like 1,500, right? It's 50 of 1,350. So very few of them are already up in this intrinsic value calculation. That will be something to watch because what we really want to watch is as the week goes on, is we want to look by ABS rank and we want all of these companies to have made money by the end of the week. Like as of right now, that's not the point. That's not the case. As of right now, the only ones that would have made money are, and my Pfizer's not updated though, because I just updated it today. If I had left it in there for Friday, it would have been profitable, but it's not yet. Lucid, like none of these have made money yet, except for Kimberly-Clark and McDonald's, which apparently has moved a little bit today. Yeah, has moved more than they needed to today. And then slightly with Rivian, it's also a low stock one. Slightly with Shopify. I'm looking at really companies below 5% though. The premium ones are going to be below 5 and definitely below 10. You would not want to go above 10. So you'd stop right here at about Zscaler when you think about all the companies that are probably investable in the straddle strategy. It's these, right? And what, like Roku is up, Mouch Group is up. Well, anyway, this is what I'm going to be monitoring every day because all we have to do is dump the new prices of the stocks in there. We're not going to change the options because we're freezing our option quotes from last week, and we're doing a comparison to what if we had acted, like I said at the beginning of the week, when you have at least a full week of your option term, how would you have done? We're going to know how we would have done with every single company. That's going to be really awesome to look at. All right, so have fun with stocks today. Twilio has been the Twillist. We'll see if Twilio has a twilight night and goes down or keeps going up. Good luck, everyone. May all your trades be winning. We will continue to do this all week and really get an understanding of exactly how this is working. And if we just want to literally set it to, you know, buy these options every single week, and we're going to be able to measure exactly how well it's doing. All right. Good luck. May all your trades be volatile and profitable.